So, Mr. Alex, are you still on the call? So, learn to trust your analysis, right? Learn to trust. The only person that has, yeah, go ahead.
You know,
Yes, go ahead. I'm listening.
as you were doing the market recap analysis, yeah, you were showing us these 3 hours. Since this one is selling,
Yes.
and it's better not for me to chop and sell. That's why I deleted. In fact, I deleted it on the call. On this call, I have to delete it on this call.
No, nobody.
Earlier. But I still have the setup and everything on my trading.
Oh, yes, okay. That should strengthen and teach you to, trust your analysis actually. Just learn to trust your analysis. See, there's nothing else. Just trust your analysis. That's all you need. All right. No, but even I can have.
Remember now, the bias was formed on the
Okay.
Hello.
Yes, I can hear you.
Yeah, you can continue. I said the bias was formed on this analysis. On this one, this key level that was respected here and got disrespected. And next time it came, it respected it. So I now found this key level, this last key level to be like, okay, price will come here and buy again. So that's why I placed my entry there. But anyway, lesson learned already.
Yeah, so you must learn to trust your
Lesson
analysis.
learned already.
So, but it's all right. I'm glad the trade is going your way. If I was in this particular trade, right, I would have put my stop loss here. This would have been like a 1 to 3 for me personally because I do 1 to 3. And see, you don't see. I'm telling you guys, and I'm not trying to make. I don't know if it's to say make mouth or to say whatever it is, but I'm trying to tell you that I know what 1 to 3, just trading just 1 to 3 has done for me personally, right? This is already a 1 to 2.4. 1 to 3 will be here around this place here. Right. You can see 1 to 3 is close by already. So if you trade 1 to 3 with a good system, I'm telling you, you would pass prop firms like it's just that I don't post most of those things. I just post trade results like when traders played out, I post all of those things. I have prop firms that I've passed already that I've not even started trading them. I've passed them. I just left them. I started another one yesterday, or I think today. I'm almost done with that particular one. That one is a 30K account. I'm almost done with that one. So, and all of those things. And it's a simple system. It's a 1 to 3 system. 1 to 3, 1 to 3, 1 to 3. It's not like I'm doing anything. It's not like I'm doing 1 to 20, right? It's not like I'm doing. So let's go back to everything we're talking about. So we spoke about, so if you look at advanced market structure, right? We're going to, so this one now is very, very clear. Like yesterday, that was what I was able to use to frame this trade idea, right? So if you look at it structurally, right, you can see the structure. You can see, sorry, please hold on. So when you look at it structurally, if you move to the line chart, so on the line chart, you can see what we have here, right? You can see we had this liquidity sweep here, right? After the liquidity sweep, we had this break, right? So this is where this is the origin of the entire move. The origin of the entire move here was here because we swept liquidity. We also broke. In fact, we broke above 2 structural points, right? So you can see how that happened, right? So now the question is, where did we move from? So if you look at the structure, right? So this is the origin of the entire move, where we had a strong low 1, we had this inducement liquidity 2, we had this one 3, right? So now after this, so what did you notice that price came to do based on advanced structure, right? This is advanced structure now. This is inducement liquidity. So one of the things I always love to emphasize, right? I've said it over and over again. There are 2 assignments that price have. Every other thing is background noise. There are 2 major assignments that price has to do. If you understand it, you will not have problem. The first one is that price is looking to attack liquidity. Number 2, price is looking to rebalance and hold imbalance. Then I also added it. I said, if price is going to attack liquidity and rebalance and hold imbalance, at what particular pricing level pay attention. At what pricing level do you expect price to bounce off from? This was where my bias for the GU of yesterday was from. This is a key level here, right? This is a key level here that is overlapping inside of this imbalance. Are you seeing how this thing is repeating itself? This is a key level that is overlapping inside of this imbalance, right? So now we have not even gotten to key level, right? So let's not talk about it yet. So let's just keep talking about advanced market structure the same way we are talking about it, right? So look at this now. So two things now. The moment this trade forms, right? Because I use every day before I take a trade, I'm comparing the line chart with the candlestick chart a lot. I'm always comparing a lot, right? So now the question is, I'm not doing so much because now this becomes my external range liquidity. So like I said, when it comes to structure, right, advanced market structure, price seeks to do what? Move from internal range liquidity. After taking out internal range liquidity, we're going to see an expansion to the upside to take out external range liquidity. Then we can continue to see a reversal until all of this happens, and all of that. So based on that has happened. So I have internal range liquidity here that needs to go. We also have this little imbalance that needs to be rebalanced. Write it at the back of your notes. Remind yourself every day, right? That price seeks to do two things: attack liquidity and rebalance and imbalance. Then you ask yourself, at what pricing level with price bounce off from if price is going to rebalance and hold imbalance? So look at where I'm buying from, right? Below, just inside of this particular, I'm buying from this particular imbalance here, right? And you can see that it has a key level inside of it that is overlapping inside of it, right? So it's a 10 pip stops, right? It's a 10 pip stop. So we're moving from internal to external. So let's do our 1 to 3 from here, right? So this is a 1 to 3 already from here, right? Easy peasy from here. 1 to 3 already. And overall, we want to target this external range liquidity, right? So if we're going to be targeting that external range liquidity, let's see what price does, right? Play price. Okay, so we are in this trade already. So you can see our 1 to 3 has already been smashed already. Can you see 1 to 3 smashed? Can you see how price bounced off from this particular point? And you can see the momentum that kicked in immediately. So what are we saying price would do from external to internal, right? From internal, the moment we see an internal, what did we say will happen? We are going to see an impulsive move, which is going to be a continuation, right? So you can see how this move is very impulsive to the upside. But now compare this particular move, you can see this momentum push to the upside. Compare it to this reversal that is here. We took out this external range liquidity, right? After taking out external range liquidity, we're supposed to see a reversal. So you can see how we sold, we bought, we sold, we bought. Then we started to, before we moved down, right? But this one is just a one-way movement. So we had the reversal. Now we have the continuation. So what do we have? Let's see how that continued. Boom. And you see that, right? Just by understanding structure, right? Just by understanding advanced structure, right? Just by understanding advanced structure. See, so you can see how price played out from here, straight to here, from here, straight to here, right? And all of that. So another one you can actually see again, right? You can go back to your chart and also you can spot there. Let me show you one. Let me show you one more, right? The one I spoke about where price begins to engineer its own liquidity. So if you pay attention to price that you have here, right? Look at what we have here now. Move to the line chart. I want to show you what so that you can be able to see. Line chart is very important. What do you see here? On the line chart, we can see clearly that we swept this particular liquidity. We broke below this particular structure. Are you seeing that now? We swept this liquidity here. We also broke below this particular structure on the line chart. But when we move to the candlesticks, we don't really have something like that, right? We have something like that, right? So you can see this is where the sweep of liquidity happened, right? On the line, on the candlesticks, then we had this break of structure here, right? Now that we have broken structure, sweep of liquidity, break of structure, what did I tell you about this type of trade formation? That price from the range high, right? This is the range high now, right? Let's put it like this. From the range high to this range low that was actually created, right? So look at what price did. So price created this range low, right? Traded above, could not take out this range high, but it traded below, right? But it took out this one. So look at what price did. Came back to take out the inducement liquidity. So can you see what price did? It engineered its own liquidity here, right? Look at what price did. Engineered its own liquidity, played out from a key level here, and price continued to move to the downside. Can you see how price continued to move to the downside, right? So Look at another one. This is another example. These are like recent examples. So when you look at structure now, right? Structurally, right, everybody would want to actually sell from this particular point. Just with the basic understanding of structure, right? Everybody wants to sell from this particular order block, right? You want to sell from this other block. The reason you want to sell from the other block is because this other block was responsible for this move to the downside, all of this impulsive move to the downside, blah, blah, blah. But because you understand advanced market structure, you remind yourself the market wants to do two things: attack liquidity and rebalance and hold imbalance, right? This is the liquidity that price needs to attack. Where is the imbalance that price is going to rebalance? This is it. So we have two conditions that needs to be satisfied. Then we ask ourselves, at what pricing level do you think price should bounce off from? Right now, you will look at the top here. We've not gotten to key level. I don't want to move ahead of myself. This is an open close one. This is an A-shaped key level. This is another A-shaped key level. Right? Are we expecting price to give to us a deep retracement like this? No. Can price do that? Yes. But are we expecting it? No. The reason why we are not expecting it is because, number one, we have structurally advanced structure is in place. We had this lower low, lower high. We had this lower low. So we want this lower high, which is going to serve as our internal range liquidity, to be taken. Then we'll go for external range liquidity. Do you understand now? So are we expecting a very deep retracement? I'm not expecting a deep retracement because now a few conditions has been met, right? We had this move to the line chart. You see what I'm talking about. This is it. So we had this lower high. We had this lower low. We had this lower high. We had this lower low, right? And I said in a bearish market condition like this, every lower high is going to serve as a what? Every lower high is going to serve as your internal range liquidity or structural point. So we're expecting price to take out the internal range liquidity and continue to move to the downside, right? That is what we're expecting. So we move to our line chart. So what do we have? Two things like we said. So look at this. We broke below this particular structure, right? So we have, this is the origin of the entire move. So the question is, we want to see price do two things: attack internal range liquidity and also rebalance imbalance, hold imbalance. At what specific pricing level do we want to see price move? Yeah, move to the line chart. You will see that we have a V-shaped key level that is overlapping inside of this imbalance here that needs to be rebalanced, right? Move straight. Now we are selling from there. That is where we want to sell from. That is what has our interest. We sell from here. We are doing a 10 pip stops. Let's just put price here. And we are targeting 1 to 3 again. Let's pray price. 1 to 3 done. Did price go beyond 1 to 3? Yes. Yes. Why did price go beyond 1 to 3? Look below. Can you see this internal range liquidity again that is resting here, right? What can you see this internal range liquidity have? It also has an imbalance here as well. So what do you expect price to do? Attack liquidity, rebalance this imbalance again, right? Rebalance the imbalance again. So you can see that that is why the moment we took out this particular liquidity price and we did a complete rebalancing of this imbalance here, look at what price did. Price started to reject, but the price continued to move lower. Yes. But did price give to you a 1 to 3? Yes. Look at this. Who would have thought? People would have been waiting for this particular order block here, right? Some would have been looking to sell from this order block here. Your stop loss is my entry, right? And all of that, right? But look at this, because you have an understanding of what the entirety of what advanced structure talks about. Price is looking to take out in internal range, run to external range, and all of that, right? Are we together? Are we together? Are we following?
Yes, boss. Yes, boss.
So if you move the way it is on the lower time frame is the same way it is on the higher time frame, right? So you will see. So look at this. So look at this. So what do we have on the 4 hours, right? You can see this is the entirety. This is the origin of the entire move. Yeah, this is the origin of the entire move, right? If that is the origin of the entire move, definitely this becomes our internal range liquidity, right? This becomes our external range liquidity, right? The question is, we now ask ourselves, We have an internal range liquidity that needs to go. We also have an imbalance that needs to be rebalanced. But we are now asking ourselves, at what pricing level do we want to see price bounce off from? So we have this key level here that got disrespected. You know, it was respected once. We sold, then it got disrespected. So if we play that particular key level, so you can see I would have missed that trade. You see I would miss the trade, right? All of this price move from external to internal. So where did price bounce off from? Let's investigate on the 3 hours, right? So if we move to the 3 hours, we have this 3 hours key level here. You can see how we missed it on the 3 hours. Let's move to the 2 hours. Let's see. On the 2 hours, the key level is adjusting to the upside as well, right? It still missed it, right? Then overall on the 1 hour time frame, can you see the 1 hour time frame here? This is the, can you see how close this key level that is overlapping inside of this imbalance is close to this particular inducement liquidity? I made a tweet one time last week. I think it was on Friday. I don't know. I'll share that tweet with us later today. One of those guys from the free Telegram channel that has been, I think he's one of those guys that he had like a 2 straight weeks of winning streaks, right? And he posted something, and on Twitter, he tagged me, and I said, if I was supposed to trade one setup for the rest of my life, right, it is just going to be this one setup, right? Price has inducement liquidity or internal range liquidity, and it has a key level that is overlapping inside of that imbalance, because market has just 2 responsibilities: attack liquidity, rebalance imbalance. Then you ask yourself, at what specific pricing level inside of that imbalance do we expect price to bounce from? Where do we expect price to bounce from? So this is a 1 hour key level here, right? If you move to the line chart, you can see it clearly, right? This is an A-shaped key level here that got disrespected. Okay, hold on, let's finish. So this is the 1 hour key level here that got disrespected, right? Sitting inside of this imbalance that is resting and very close to this key level. So we want to target from internal range liquidity to external range liquidity. So what did price do? Tap, momentum kicks in, and we went straight to our external range liquidity, right? Good. Condition satisfied. So we have moved from internal range to external range. What did we do? We satisfied those 2 conditions. Sweep internal range liquidity, rebalance and hold imbalance, and we went straight for external range liquidity. So Mr. Daniel, unmute your mic and ask your question. Mr. Daniel.
Can you hear me?
Yes, clearly. I hope everybody can hear him too.
So
yes, go ahead. I just want to be sure everybody can hear you.
so it's regarding this key level overlapping and imbalance.
Yes.
I've got 2 questions. So number 1, the probability of a key level overlapping and imbalance here, is it higher than this V-shaped and A-shaped key level when it comes to probability? That's one. Then the second question is, for example, now on EU as we speak, do we have the same key level overlapping and imbalance, but due to the session, is it advisable to still be in a trade that's after New York and London and enter and swing the trade till the next day?
Okay.
Those are my 2 questions.
Those are the 2 questions, right? So let's attend to those 2 questions. So he's asking a question that if we have, which one is highly probable, right? Do we play the setup that has like a key level that is overlapping inside of an imbalance, or the one that plays with a key level? So now this is something we're going to cover, right? So I said something. I said, let me tell you why I prefer this one, right? I mean, not like I prefer, I play anyone I see, right? The one that is very clear. So if, for example, we have a sweep of liquidity like this, we have a trade formation like this, sweep, break. The moment we have a sweep and a break like this, the next thing that comes to my mind is that I want to know, where is the origin of the trade? Let's say the origin of the trade has started like this. Inducement liquidity, price has played out from the V-shaped key level, right? Then price broke above this particular high, created another inducement liquidity. Then price plays this, let's say now this is the key level. that is overlapping inside of this imbalance after price has taken out this particular inducement liquidity. I always consider this particular first place. You can see, I call this particular first place where the trade moved. I call it the origin of the move. You can decide to call it the confirmation of the order flow. This is where the order flow started because why? We swept liquidity and we broke structure here, right? So price took out the inducement liquidity and played the V shape. So I love to play this particular trade setup, this one that I'm talking about, where the key level overlaps with the imbalance. So both setups are highly probable as long as you have everything in check and you have an inducement liquidity resting either above or below it. Everything, both of them are highly probable. But the thing you need to understand is that the reason why I love this one is that if I miss the origin of the move, where the move started from, where price has played this particular key level, if I miss this move, right, this is my next setup. Please mute your mic, please. So if I miss the origin of the move, which is this particular setup here, where the price took out the inducement liquidity like this, right? Price took out this particular inducement liquidity and played out from this particular key level. If I miss this, the next ideal key level I'm going to be looking out for is a key level that was disrespected, one. Then price creates an inducement liquidity close to it, and that key level that was disrespected is resting or overlapping inside of an imbalance. So this is what I'm trying to say. So I call this one the origin of the entire move. This is where the move started. There are times where I can catch a trade from, you know, the origin where it started. There are also times where if I miss the origin, I'll look for continuation setups like this. So I call this particular type of setup the continuation setup. So that is why I said if I was to trade one setup for the rest of my life, I would love to trade this continuation setup, which means that after price has confirmed the order flow and price is moving to the upside, the moment the setup shows up, I want to take it. So look at this. So if you look at this particular phase, so let's look at where is the origin of this entire trade. This is the origin. You can see what we had. We had this engulfing to the upside and price created for us a V-shaped key level, right? This is the 1 hour time frame, right? We don't have time to investigate it so much. So you can see price created a V-shaped key level for us with an engulfing, right? Just like we had on the 4 hours, right? So what did you notice that price did? Price tapped into the key level here. Do you see the inducement liquidity that I'm trying to show to you? Yeah. Can you see how price created an inducement liquidity there, right? So price took out this inducement liquidity, tapped this, oh boy. Trading is beautiful. You will take losses, but when you have the right knowledge, trading will be sweet. I'm not going to lie to you. Trading will be sweet. So look at this. We have a key level that is resting here. We also have this imbalance that is resting. I want to see which imbalance is this. Ah, beautiful. Look at what I was trying to explain to us this morning, earlier today in our first call. I told us that there are times where Asian session is going to create inducement liquidity close to a V-shaped key level. Do you remember when I said that? Were we on that call when I said something like that? So Asian session here now created inducement liquidity. Honestly, I never even knew. So look at this. Inducement liquidity take a price tapped from that key level. Boom. Look at this. Look at this. We moved from internal range liquidity. We moved straight to external range liquidity. Are you seeing this now? We move from internal to external. So where is the origin of this entire trade? Yeah. If you miss this origin of this entire trade, the next place you are looking for is this. We can now see that this particular key level was broken, right? It was disrespected. So I'm only going to be waiting for price to create what we call an inducement liquidity close to it, right? So that it becomes where I want to look for my continuation setup. So let's look at this. Let me increase this. So inducement liquidity has been created. So what did price do? So if I missed the origin here, patience, I can be patient enough to wait for the continuation. Look at this. Inducement liquidity has been created. Internal range liquidity taken. And straight up, boom, we have taken out external range liquidity. So are you seeing that both of them are highly probable? Both are highly probable. All I'm just trying to say is that if I miss this one, origin, if the origin of the trade, because the origin of the entire trade helps us to confirm the order flow, right? If I miss where the order flow has been confirmed, the only thing I'm looking for is a continuation. And the continuation setup is always like this. This is what I'm always looking for. A key level that is overlapping inside of an imbalance that has an inducement liquidity very close to it. That is what I'm looking for. That is why I said if I was to trade one setup, I would play this continuation setup, which means that all I will have to be doing is wait for the order flow confirmation to be done, wait for a key level to be overlapping inside of this imbalance, wait for inducement liquidity. It's a whole lot of patience, but when you catch it, you catch it. Do you understand what I'm saying? Did I answer your question, Mr. Daniel?
Yeah, you did. The second one is regarding what if that setup falls in like after New York session? Let's say, for example, now the entry you have goes into Asian session. Are you still gonna take it for a swing?
Okay, so are we going to take it for his? Okay, the thing is, I don't swing, right? I don't swing. I don't swing a trade, right? So what I would rather do is that I would, okay, so I think this is the setup you were trying to show to us, like, right? Is it this?
Yes, exactly that one. I'm currently in it right now.
Okay, okay, good. So let's see what happens here, right? So if you want to, so when it comes to swing, I mean, you can hold swing trades through all sessions, Asia, London, New York, but I don't swing because spread at night, you know, the moment it's 10 o'clock, the spread is always going to be very, very crazy, right? And all of that. And I'm a day trader, so I have to do, I think one of the things is that my model, the way I trade, has been designed in such a way that it has been built in such a way for day traders, like intraday traders. Does it work for swing traders? Yes, but I've never used it to swing. So that is why you will notice that most of my trades are within London or New York. The moment it is outside New York, I'm waiting till the next day. I'm not doing anything again. I'm just going to chill and wait till the next day. I'm not even doing anything. I'm not trying to look for any setup, right? So me personally, I had this setup marked out today, right? But look at the time that this setup is coming to activate. I'm not even going to take it. I've deleted the limit since the moment this first move happened. I deleted my limit, right? I'm not going to take it. Is there every possibility that it's going to play out? Yes, there's a possibility that it's going to play out, right? But am I going to take it? No. And the reason is because this is already outside, you know, the New York session, right? But there's also a possibility that it can play out during Asia, right? So I'm not saying you should delete your limit. You can leave it and allow it just if you have it on your limit or you have it on your trading view, just leave it and allow it to play out. So you can see that this represents everything we just spoke about, right? Price has moved. We have an imbalance. We have a key level overlapping inside of an imbalance with this particular key level here, right? So we can just continue to see price move to the upside because overall the order flow is actually, you can see the order flow here, right? The order flow is to the upside, right? We have broken above that particular high. So the order flow is to the upside. So we're likely just going to see price continue to move to the upside. So if you want to take a trade, the moment it is outside London and New York, personally for me, I don't even engage anymore, right? Because Euro USD is a London pair, right? So, and the reason why I would advise you trade pairs like this during outside New York and London is because there is little to it is called volume, like they call it liquidity injection, right? There are little to no liquidity injections during Asian session, but you will have more liquidity injection during pairs like AUD USD because Australian dollar it's a Asian session pair, New Zealand dollar is an Asian session pair, US is CHF. The CHF there is an Asian session pair, so there can be a little bit of liquidity injection inside those pairs at Asian session, right? Euro JPY as well. And there's always liquidity injection at Asian session. But you see GU, EU, right? All those ones are majorly, I mean, nobody should be trading EU and GU during Asia, right? But you can trade GJ, GBP JPY, Euro JPY, USD CHF. You can trade AUD USD during Asia, right? Because those are the times, because the way the market operates, there's a link, there's a movie I watched. It's called it's a real life movie on how Forex is actually being done. I think the bank documentary of 1986 or something like that. I have the link in my archive. So what they do is that London has their time for liquidity injection, Asia, and then New York has their time for liquidity injection, Asia has their time for liquidity injection. So what they do is London wants its time. London is going to call New York and Asia that they're about to buy or sell the pound. New York, when it is their time, New York will call and say, okay, we're about to either buy or sell the dollar, Then Asia, that is where we begin to have correlating pairs like AUD USD, Aussie, that is the AUD, the Japanese yen, and all of those things. So they have their own specific times where liquidity is actually being injected. Do you understand? So that is just the way it is. So anything outside New York, I personally don't even advise it. I wouldn't even take it personally. So, right. So are we clear?
Yeah, all good.
Okay. Okay, any question? We have just a couple of minutes left. We have 9. We have 7 minutes left. Any other question from
I've got
anyone?
one.
Okay,
One
please.
I wrote down before in the previous class. I've never seen your confirmation entries. Like, let's say for example now this setup you have right here. I've never seen when like you've gone. Maybe you've posted, but I've not seen it because I've watched the pre-recorded videos as well. But I haven't seen confirmation entries whereby you go from 4 hours to like 5 minutes. I don't know if you do according to your rules of trading.
Yes,
But do you
yes.
go down lower time frames to like get confirmation?
Yes, I go to lower time frames to get confirmation. In fact, if you go to the free Telegram channel, there was a trade I took today that ended up in a stop loss. That trade already did a 1 to 3. It was an EU trade. It did a 1 to 3, then it started to reverse. I just said, okay, it was already a 1 to 3, but because my target was here, my target was this high. This, I think, is that this high or was it this high? No, okay, this high was my target. So price started to run. It was very close to it. It was the entire move was already a 1 to 6. So it was already at a 1 to 3. So I said, let me just go to the bedroom and come back. Only for me to come back. It was one candle that took me out. I was like, hey, why did I not just take my 1 to 3 and 1 to 4 and just get out of that market? Right? And all of those things. So the entry was actually on the 15 minutes for that particular trade. My entry was on the 15 minutes. So I had my confirmation entry was on the 5 minutes actually. Right. So there are times I use it too. Yes, I use it. Right. It's not like I don't use it. I use it. Right. So but when we get there, when we get to confirmation entries, when we are done with storyline, building buyers and all of those things, it's a journey. Don't worry. We are still meeting tomorrow as well. So it's going to be,
Or
yes.
the classes you want to have, the upcoming classes you want to have, are they relating to your pre-recorded videos or they are totally different?
And they are related, but we are taking everything from scratch.
Oh, all
There
right.
are some things we
Makes
didn't
sense.
touch, like premium and discount, time and price, the 10 trade rule. Those ones are not in the pre-recorded videos, right? So we are going to touch everything from scratch.
I
So
appreciate it.
we're touching everything from scratch. I mean, yeah. So
Mr. Fortman,
yes, sir.
well done, boss.
Yes, sir. Go
No,
ahead.
mine is not a question. It's just to urge you and encourage you that you are doing well. Some of us that has gone through some journey in
Yes.
this forex market,
Yes.
when we see people that are doing well, we appreciate them the more. You can see that's not what I'm just doing.
Yes.
I've gone through some circles, and what you're having here is top notch. Keep it up, and God will make it more easier.
Thank you.
So
Amen.
that's mine.
Thank you so much. Thank you. Thank you. I really appreciate the kind words. No question. So the recorded video, I don't know, Mr. Daniel, are you still in this trade? Do you want to hold it to Asia to see how it plays out?
To be honest, I'm gonna hold it because I'm already in on it already. So
No problem. Just the moment you are in a trade, you don't have control over it anymore, right? So
exactly.
just allow the outcome just play out, right? Just allow the outcome play out. Okay, so what we're gonna do is, I'm coming. Let me try to do something right now. 08566 1.08. Let's see. Okay. Okay, let's see what happens. Yeah. So the recorded all the pre-recorded videos from the market commentaries we did today, right? So this one, please I will share them tonight. When I'm done now, I'll share them so we can all go through them. Please go through them. See, reduce your sleep. Reduce your sleep. This is the time for you to reduce your sleep. Just reduce it. Don't worry. The moment you start making a handful of money, begin to pass prof firms, you can begin to sleep, right? This is the paradox. I want to tell you something about the paradox of effort before we end this call. We have 3 minutes left. Okay, yes, I'll record that one tonight. I think the video you are talking about is for journaling. For backtesting, how to get TradingView Premium. I'll record it tonight, don't worry. So this is the paradox of effort, right? That nobody will tell you. The paradox of effort states that you have to put in much effort until it becomes effortless. Do you understand what I mean? That for something to become effortless, there must be an investment of several efforts. You must put in an effort, right? That is the paradox of effort. Nobody's going to tell you that it was effortless from the beginning. It's a lie, right? It's a lie. Nobody's going to tell you it was effortless from the beginning. That is the paradox of effort. For something to become effortless, you must put in so much effort, right? The investment of your time and effort over time is what makes it effortless. Right? Do you understand? So that is just the way it is, right? That is just the way it is, right? It's a beautiful one. See you guys tomorrow. I might not trade tomorrow, sure. But if I see a good setup, I might just go a little bit low. So I wish I still had my limit on this trade. This is already going very well. So we don't know how this will play out, but anyhow, so don't forget, remember the paradox of effort. Write it in your journal and remind yourself every day that for this thing to become effortless, there must be an investment of accumulated efforts, your sleepless nights, your resources. You're going to cut out some friends who distract you. You're going to reduce your WhatsApp time. You're going to reduce your Twitter time. If you notice, I come on Twitter only to repost because my timeline is always blowing up. People are tagging me. Monday one was even the worst. My hands were paining me. People were tagging me to their trades, tagging me. So what I do is I just come, repost, come, retweet. I just go and retweet. That is the only thing I'm only doing, right? It's because, there's no time. Time is of the essence. That's one of the most valuable assets that you cannot, the moment it is lost, you cannot get it anymore, right? So if you're a Christian, you know what Paul says about time. He says, redeeming the time because the days are evil. And let me tell you, one of the ways to redeem time is to have money, because one of the ways you can redeem time, that means buy extra time, is that when you have enough money, people can do the menial jobs that you should do. For example, imagine you have money as a trader, you won't be washing your clothes, you won't be cleaning your house, you won't be washing your car, you won't be doing your cook. You have people that are assigned to do all of those things. It will even make you extra and super productive. This is why we have billionaires and millionaires who have they have chefs, they have drivers, they have people who wash their clothes, clean their houses, cook their food. It makes them super, super productive, right? So that is all I just wanted to say to you, right? All the recording will be shared. Have a wonderful evening. See you tomorrow. Cheers.